Oh, there we go.
All
Hi.
right, we go. What's up, Zach?
What's going on?
Yep,
Merry Christmas, Happy Holidays.
yep. Likewise, Merry Christmas, everyone. Yeah, so I guess the goal of this was just the kind of everyone kind of has their Twitter Spaces where they talk about how they're all geniuses, and I kind of thought, well, let's just kind of do one where we just kind of hang out and talk about the week and maybe some tips that we had or like some strategies that we use, but not really any kind of formal thing. Like I know Zach said, so what do we need to get ready for this? And I said, nothing.
Yep, that's accurate.
Yeah. So I guess Zach, I know. So Zach's more of a momentum. He kind of does a little bit of everything. Like Zach was originally pure momentum guy,
Pretty
and
much.
then kind of saw how I dip bought, but then that wasn't quite perfect for him. And then Zach, you kind of adjusted your style a little bit. So
Yeah, so I started basically, like you said, as a more or less as a pure Momo. I'd wait for a break of a support or resistance level, and then I'd enter the trade and blah blah blah. And then when you came about, I basically wanted to try to learn as much about that style as I could. It intrigued me. I liked the concept behind rather than buying at a break of a resistance, you're buying at a support level in looking for the bounce. So it's kind of the same concept, but the opposite end of the spectrum. Um, and so what I kind of have done is I've started taking your dip buying strategy to a shorter time frame. Like you have a tendency to like to buy stuff and then ride it out for like multiple days.
yep,
Um, that doesn't really jive with me and my style. Every now and again, I'll join you on a trade, and it's fun and everything, but it's not it's not what I like to do. It's not what I'm comfortable doing. But I do like the concept behind what you did. So I tried to add um, a lot of times at open, right? You'll see that big flush at open and that bounce at maybe a smaller support level, maybe just from like a day or two before or the week before. Um, so I try to do a little bit more of that where I'm looking for a shorter term level of support to grab a better entry to get a better price on a contract that I have a high expectation of continuation up after it bounces. Does that make sense?
yeah. And then you kind of learn the when you buy the support zone, you got to have a little bit of those firm diamond hands because it might fall underneath for a little bit.
That's correct.
Yeah, because a lot of times with the momentum traders is if you break that resistance point and then you fall it back under, like you need to cut those quick because once you fail it, it's likely to fall back down to that next support because it failed that breakout.
Right.
So you might go from it's harder for a dip buy to go like negative 50% on you fast than it is for a failed breakout because all that premium is getting rushed into those plays. And then if it fails, it just knifes on you that premium.
That's correct. Yeah. One of the things you hear from a lot of breakout traders is that they have trouble pulling the trigger. I think that a lot of times that is a psychological effect of what you were basically just describing, where people have tried buying, like, let's say the trigger's at 100, whatever the stock is. Your buy level is 100. You buy at 100, it goes up to 120, and then boom, it just flushes and it just completely loses and it drops all the way down to, say, 98 or 99 or whatever the next level support is below. And what you're saying is like that when you buy that breakout, you get that premium rush, that IV spike, and then when it goes the opposite direction, you get annihilated. And that, for a lot of new traders, is what makes it hard to pull the trigger. Does that
Yeah,
make
and
sense?
and then I know a lot of people on here probably see the trigger traders. So it's kind of important. Like you'll see those guys say, "Here's the best possible move that happens," but it's important to kind of like sync what they're saying for their trigger. Like Zach will do triggers every now and then, so it's important to take like if you want to play some of his names, try to line it up off what you're saying because you can't take all maybe all five of Zach's triggers hit. You can't. Zach won't even take all five of them.
Yeah.
It's important to like find the ones that you like. He's saying here's like possibilities, and same thing with like my due diligence posts are more they can be trigger based or support zone based, but it's more so for you to look at that stock and say, here's where things can happen, and kind of tailor it to what you want to move with it. Like, I'll still keep giving my plays, but I might do 5 due diligence posts a night, and you can kind of go back throughout the week and cycle through. And then just, it's all about tailoring it to what's your style. Like, Zach's style isn't my style. My style isn't Zach's style. Same thing. None of our styles overlap with Kes. Like, you're never going to be like copy and paste exactly what someone else's does,
Yep.
because I can't, like, I can know a breakout's going to happen and I'm not going to play because it's like, I don't like being on that side of a play. And same with Zach. Zach might say, like, oh, this is definitely going to bounce here, but he says, I'm not going to be some moron buying this before stock absolutely dies. And then it's all about what you're comfortable with, because you got to, just like Zach said, you can't pull the trigger on every single one, or like you're afraid to. You got to be like some level of comfortability with what's going on there.
Yeah, like I had one of the guys who's in my Discord actually just posted on Twitter when I was talking about the failed breakouts and having trouble pulling the trigger. He said, that's when I used to cry and then panic sell. And that's what a lot of people do when they're newer traders. So one of the things that I've started to do now, when I do, if anybody who's listening is a breakout trader or has breakout traded, one of the things that I've started to do is exclusively play the retest of the breakout. So let's go back to my example where I was talking about, like, let's say the trigger's at 100. It breaks through 100. I want to basically have, usually, well, I watch it on the 10-minute time frame. So for me, I want to have a couple of closed candles over that trigger of 100. And then when it eventually, if it comes back down and retests 100, that's when I want to buy. Personally, that's how I've started playing breakout trades, because the amount of times that it will fail on the retest is less than the amount of times it will fail the initial breakout. And I feel like the risk to reward is a little bit better. I think that, I don't know if the premiums are all that much different, but I feel like when you get that good solid retest, you can still get like a full day or two run on those contracts if you want to hold that long, but you're not as likely to get completely annihilated as that initial breakout. If that, you know what I mean?
Yeah, and then you got to always, also for those like breakout plays, like you'll see a lot of people say, and Zach will say it too, like you need to lock those gains a lot faster.
Yeah.
Because you're playing near where it gets hard. The breakout's going, but every time you break up to the next level, the level after that gets a little bit harder and a little bit harder and a little bit harder every time on the way up. So that's why, like, even on Friday, like I played a couple push just as my lottos, and Google worked good, and I was like, here we go, and then it just shot back up, and then Tesla didn't work at all. I was like, oh, this is so high, how it's going to get harder and harder here, but everything was just nonstop going. So Tesla didn't work, Google worked good, but those are the same things. Like, just obviously it was a Friday, so the premium is going to die faster, but when you don't get that direction you want, you just get crushed on those quick. So those are the trades that you need to use your quick lock gains in, and then also you need to use some kind of stop loss or methodology, because
Yeah.
like Zach said, he's playing those for just like the day, and maybe he'll swing them. Those stocks, and he could do that with a ton of different stocks. Like, if you followed me for a while, you notice that I kind of really only play, I don't know, I probably haven't traded more than like 25 names the whole time I've been on Twitter, because I kind of want to understand the underlying news and kind of how that stock reacts. Like, I know, like, if Snow, for example, is down like $50 in a week, I was like, all right, this is going to bounce at some point. Like, Zach might say that chart looks disgusting. And I was like, yeah, it does, but maybe not for tomorrow. So you really need to understand the stock when you're doing the dip buy. That's why, like, you can't just go throwing a dartboard. Like, people say, like, oh, you could have threw the dartboard and bought anything today and it would have worked. Well, if you would have threw the dartboard at a list of stocks that you knew, you'll get those better returns. So it's all about kind of understanding the process, and not just, you can't just copy someone's process and put it into work and think you're going to be successful. You got to kind of like tweak and manipulate it and make it something that you can like emotionally wrap your heads around, and you can also like put your money into and feel confident. Because if you go and tell Zach or go and tell me, oh, I just lost all my money because I I thought your play would go to the moon, Zach's going to be like, well, it went to 25% and I sold all mine out. Or I might be like, well, I sold half at 100% and let it explode. So if you have a reason why you're taking a play and it lines up with like one of these FinTwit Frurus or what one of the us are saying, those are the plays you want to take. You want to also have a reason why you're getting in. You don't want to just blindly copy and paste, or if you do blindly copy and paste, kind of understand the risk associated with it.
Or just
But
be a little bit more aggressive taking your gains. If you
yeah,
if John posts, I'm buying a firm calls at 1, whatever the strike is, and it runs up to $1.50, and you literally did zero research on a firm, and um you have to be willing to take your profits earlier than he might, because he has a plan. He did his due diligence. He knows what he wants it to get to. You don't. So there's no harm in you taking profits before he takes profits. It's all relative to what you're doing. And it's the same like when I do breakout trades. If I'm doing breakout trades, I may take my 20-25% for my first trim, and then I'm going to set the rest of it at a break even stop. And then if the trade continues to move up, I'll continue to trim and or move my stop loss up. But it's based on levels I expect to hit, that if I posted a random play, you may not have that information. You may not have done that research. So you have to maybe take more conservative profits if you want to remain profitable long term.
yeah, and then kind of once you start getting those wins under your belt, you can start getting like more and more aggressive, or as I like to say, like more and more of a degenerate. Like like Zach and Kessel make fun of me all the time because like, well, I didn't get my 100% profit, so I didn't trim any, and they might be like, oh, whatever, idiot, or like it's like a whole different, it's a different style. So like Zach, like Kessel showed me stuff, or Zach will show me stuff, and they're like, look, this stock's up 20, it's going to go up another 10. I was like, why are you buying a stock up 20? And they're like, no, just listen, this is how it's going to work. And I can watch them make money, and I don't feel bad not going in and chasing it because it's not my way of doing things. And then kind of I've talked about on my first space I did was and on Twitter, it's all about how you size your way into, like,
Yep.
some people might say, well, I'm going to use a 50% stop. So I would say, why not just use 50% less cash and let the whole move go out? And that kind of really takes the emotions out, because you can let plays go. Like, you've seen how crazy the stock market has moved the past few days. Like, you could have had calls that were worthless on Monday in like Google or Tesla or anything, and they could have went like 1,000% in Tesla. The Tesla 1,000 calls were
I saw a
literally,
few people who bought some Tesla calls last week in like the 1 to 120 range, and those calls peaked at like 25 or something.
yeah. So like you could have panicked, you could have oversized, panic sold yourself down 50 or 75%, and then been like crying on Friday when you're like, oh my god, they're $50 in the money, and
Yeah.
you gave them back. Like, that's why, like, I'll hold plays. I was like, whatever. If they want these calls, they can take them out of my cold dead hands on Saturday morning when they expire or whatever.
Yep. Moon or dust, right?
Yeah, moon or dust. I mean, you got to be okay with dust because you're gonna get dusted eventually. It's
Yeah.
only a
And
matter of when.
it basically boils down to what, like you said, what your risk tolerance is. So, like, if you have a $2,000 account and you want to follow John in a trade, I don't know that I would personally suggest buying more than like maybe 2 contracts, because you
Yeah,
want to give yourself, like, let's just say hypothetically you buy 2 contracts, right? So you're in for $200 out of your 2,000 portfolio. At what level of loss does that like freak you out? When you're down 50%, are you like, oh my god, I'm down $100? Or are
yeah,
you like, I'm only down $100, no big deal. Even if I lose the next $100, I'm still only down to 1,800. It's still easy to make that up. I can get that back. It's not the end of the world. But if you bought in and you joined for 1,000 and you're down 15%, 20%, that's the same thing as the same amount of dollars. So if you just size down and you just work on those small wins, it makes all the difference in the world. And then when your portfolio gets to 3,000, if you want to start buying 3 contracts or something like that, you slowly work into it. If you try to like go to the moon on the first play, you're going to blow up your account in no time, guaranteed. Maybe not the first play, maybe not the second, shit, even maybe not the 10th, but eventually it'll happen. And that's, you see it all the time. You see it all the time.
Yep, and that was one of the big things to talk about on this one, because a lot of people, I mean, I didn't trade too much last week, but the week prior, there's a lot of people asking questions, and it was a good week on, well, when do I start selling? When do I exit? When do I do this? And I say, well, anytime I'm posting those updates, like usually the first update I do on a play is about 25-30%. And that's if you had a ton of them and you want to get out, if you just had a small account and you're just trying to build the snowball to get the ball rolling, all those like tweets are just like, hey, maybe take a little here, maybe take a little here, just like, because once it's up 50%, a lot of people think that's a really profitable trade. And I know I always aim a lot higher because my risk tolerance is so high. Like I'll let my full, let's say I had the 200, like Zach said, I said, well, I'll let this 200 go to zero, because from my looking at this stock, looking at this chart, I think, well, I'll risk 200 for the chance at 600. And if I don't get it on this try, I'll do it the next try. If I go 200 to zero and then 200 to 600, I'm still 400 to the good. So, but if you're afraid, like if you can't hold it to see that negative 99 and you're selling at 30, you need to sell at 100% just to break even if you're willing to let them go to 99, which is why mine is higher. So
that being said, I think that what we're talking about in this particular instance, and John, you can correct me if I'm wrong, but you're talking about stuff going down significantly, say 99%, I think is more of a valid way to trade when you're talking about your strategy.
Yeah.
If you're talking about breakout trading, I wouldn't ever recommend anything going to 99% because it doesn't suit that.
Yeah, it doesn't.
You're trimming at smaller amounts. You have to also be willing to cut at smaller amounts.
Yeah.
So you have to know where your level of support is under your breakout, and you either need to sell when it rejects that breakout or be willing to hold until you see whether it bounces at the level of support underneath, which isn't going to be 100% or 99%.
Yes. Yeah.
It
So
may be 50, it may be 60, but you have to figure that out, and it's important to figure that out, as opposed to getting in the trade and then it fails that trigger, and then you're like, oh crap, what do I do?
Yeah.
Like, you have to know that stuff. Okay, so I used to put out a bunch of lists, breakout trading lists, like puts over this or puts under this amount, calls over this amount. And whenever I would do those, I would always have a set level underneath, like in the middle, that I would say, okay, this is like my stop loss on either end. If it goes over 100 and triggers my calls, and let's say my put level was like 99, I would say, okay, like roughly 99.50, somewhere in that middle pivot between the two, that is where I'm going to cut. And a lot of times it would be in, I want to say between 40 and 60% down.
Yep.
But like John said, if you cut at 50, but you hit 70% of the time, let's say, then you're still profitable even if you're trimming every time at 50. And sometimes you may not cut at 50% loss either, right? Like you may be able to tell based on the candles or whatever, however you trade, whether you're reading the level 2 data or the tape or whatever, you may be like, oh, this looks weak as hell. I'm going to get out. I'm only down 10%, or it's struggling at this. I'm going to get out now because it doesn't look like it's going to go. That's also something that a lot of people need to start learning and trusting of themselves too. I think that's a big thing for me. There'll be times where I'm up in a trade and I'll be watching the price action and it just looks crappy, for lack of a better word. And you can just tell it's almost like it's struggling one way or the other and So I'll just sell and I'll be like, you know what? If I'm wrong and it takes off, oh well. I went with my gut. But if it fails, then you just feel amazing because even though you only made, let's say you cut at 5%, 7%, like nothing gains in the options world, right? That's still not negative 50%.
Yep.
So that's been a big thing for me in the last couple of months is I try to focus on, okay, I may be green, I'm expecting it to get to a certain level, but I have to be willing to sometimes just cut it if you can tell that the price action is telling you something else. And that just takes time in front of the charts and figuring it out and learning it and all that fun stuff.
Yeah, screen time's a big thing. And then also trying to I like to keep like sometimes like you'll talk about a bunch of different names and that's when you get like that real technical expertise is where those like you'll see some traders seems like they know every single stock. Like I'm not sure if you follow like what's his name? What's Javi's hand or something like TD or something? He'll post like 1,000 charts, like
Oh
non
yeah,
non.
Javier or
Yeah,
whatever.
Javier will post
Yeah,
like a
T E
thousand charts.
H T E H D E E is
Yeah,
is his handle.
and he'll just post chart after chart, and that's good if you want to like see the technical patterns that are going on. But like, just like Zach kind of said, like make sure you're talking about like a dip buy, not a momentum buy. Like you have to understand the stock you're in, and you have to understand the play you're taking. Like if you're taking a trigger trader's play on Twitter, and once it goes against you, you can't necessarily use the hold till expiration style because if it doesn't work, it's not going to work. Where if you're in a bull market like we still are, and a stock's dipping, there's a likelihood that it will bounce back at some point. Like the chance is still there, as opposed to like if the breakout fails, like you're already paying that upcharge in premium, and then the fall off happens, and it's like you're really against the eight ball trying to get back up to even, and then it's even harder to get back to green. Like people show me all the time, like well, here's how much the stock has to move for you to get back to even once you're down 50 or 60%. And I go, well, you don't want to just throw more money back into a play to say, well, I'll just roll down here for no apparent reason because I'm down 60%. You have to understand kind of what you're doing and why you're doing it and tailor it to what you really need there. And I,
Yeah,
and I think that's kind of a pretty good explanation, kind of what Zach like. I think what Zach did was pretty cool. Where he doesn't really have like a it's dynamic. Like Zach started out as just a pure momentum guy, and then he tried to do dip buys, and he's like, well, those are kind of cool, but he's like, not quite for me. And then he's like, well, I'll do like a pseudo momentum dip buy hybrid that it makes perfect sense to him, and like I can understand what he's doing, and it makes him feel better about his trades. It makes him like having. Wouldn't you say you've been doing pretty good ever since you adopted that style?
yeah. I think one of the things that I like about it, you have um, a particular thought about a stock, like you're bullish on the stock, and it dips to your level and bounces, and that level and that dip level is lower than your breakout level, and it dips and it goes up to your breakout level. A lot of times I'll be taking my first trim at that breakout level. And what that does is twofold. Number one, it gives me wiggle room if that breakout fails, where I can still get out of the trade with profits. And two, if it does break out, now I'm selling my contracts into people buying at a IV spike because everybody else is buying at that breakout. So I can get an extra 15, 20% on my sells really quickly when that breakout happens and those people start buying in mass. Um, it's it just has its benefits, and like there's definitely some other risks that are involved. But again, it boils down to, like I said earlier, figuring out if you're going to buy that initial dip, you need to know where you're going to cut to. You don't just hold and be like, oh, well, it failed my first dip. I'm going to just hold until it recovers, because it may very well not. But that's kind of like where I've started to go with it, because I don't know. To me, it just makes more sense in my brain. I can't really explain it any more than that.
Yeah, I mean that's exactly how I kind of wanted to say it is. You got to do what makes sense in your own brain because everyone thinks differently. No one cares more about your money than you do. No one cares more about what you're thinking than you do. So if you could be at peace with what you're doing and be confident in what you're doing, you might change nothing about your position sizes or anything, but if you can change your mindset and your how you go about things, it might be that little extra push you need to kind of really take you over the top. And then the same thing, another good point you made was like the trigger traders level. Like if you have a reason why you should be in a stock, but before like let's say like a big name like a Theta Warrior, like one of those elite option guys that say like, oh, we're gonna buy if Tesla takes out 1,010, but you're in Tesla at 980, and you see
Mm-hmm.
Tesla at 1111, you might get a huge surge and like 200,000 people rushing to go buy it, and you just sell right into that because all that like Tesla at 1111 when 200,000 people buy is might be the equivalent of Tesla like 1035. Like when those triggers hit, people are rushing in to go buy them. So if you can kind of
Yeah, and they're slapping the ass too. So
yeah, and they're buying the ass because they're chasing after what they're trying to get. So you can put those crazy limit orders in, just like the same way I'll get a lot of good fills because I'll be sitting for someone to get stopped out on a level. You can get a crazy bot bid. Like I've had instances in like Lululemon and like thinner and even Snowflake of they break some trigger traders level or like some big level, and you might get like a sell that's like 50 cents over the ass because someone's just trying to get in. And that's why like you really need to be I almost never ever market order a play. But a lot of these momentum traders, it'll break that level point and they'll just hit the ass to get in.
absolutely. Which
Or
is
the
another reason, circling back to when I was talking about the reason that I generally will only play a breakout trade on a retest. That's a big reason why, too. Because if you're playing a breakout of a big key level, you can pretty much be assured that there's a lot of other people that are doing the same thing. And it makes it
yeah,
really, really hard to get a good fill. That being said, not as many people play the breakout because a lot of people, or the retest, they're playing the breakout. They're selling on that initial run up. Let's say it goes from 100 to 103. And then as it starts to dip again, they're all selling and they're like, oh crap, I got to get out. I got to get out. And they're selling. And then it comes back to 100 and then boom, it takes off and runs to 107, 108, whatever it is, because all those buyers are already flushed out now too. So it just has the people who are willing to hold through that little dip back to the retest. And I think that it's easier to get good fills on the retest. The price action doesn't move quite as fast on the retest, so you can actually get fills at the bid on the retest. And I feel like at the initial breakout you can almost never get a fill at the bid, almost never.
yeah, that's pretty good. So I guess another thing, Zach. So what? I guess to switch into something else to talk about. What are you watching next week other than your baby Target?
um I kind of have a set number of stocks that I watch every day, and then I'll kind of cycle in and out of them when they just seem flat and they don't seem to be moving a lot. I always have a SPY, I always have a QQQ, and I always have VIX. And then I like to mix in a couple of other big, mega caps. Right now, I have AFRM, although I don't expect to trade that necessarily. That's still on my just keeping an eye on it, watching the price action list.
Mm-hmm.
Um, I like Facebook. In Nvidia intrigues me, but I'm not sure that I'm as high on it as a lot of people on FinTwit right now. I think there's way too many eyeballs on it, but
Yeah,
that has stopped it before. PayPal's interesting. Docu is interesting. I haven't really done as much as I normally would have before a new week because of the holiday. I'm gonna probably spend some time when this is over to get into some more. But those are kind of my some of my go tos. And then I usually like to throw in like an energy company, so like an oil company or XOM or something like that.
Yeah, that's how you know Zach's a boomer. He's still looking at oil.
Can't help it.
Yeah, but that's a good point. Like I tend to do the similar thing. Like I always say, like people will say, why don't you make a watch list? And it's because every stock is kind of on my watch list every day. It's just about, well, what kind of gets in that dip buy range? What kind of gets in that section of what I'm liking? Like I don't have I think my watch list is probably like 55 names or so. And it kind of has like pretty much any of the names you see trending on Twitter, other than like the meme plays or like the squeeze plays, like the Nvidias, the Fang,
Yeah.
the all those stocks, the Affirm, the
Apple.
UPST,
Yeah.
Apple, like all those you kind of want to always have watching. Because if you see some big dip, you kind of want to say like, oh, I might want to get that one. And like Zach said, like I'm watching like Affirm and UPST and
Yeah. That's
Snow next week.
UPST was one I was looking at earlier too. Um, yeah, like one of the things I like to do is if there's a particular day where it just feels like maybe it's a low volume day or things aren't moving, the stocks that you have on your screen aren't moving. Um, I'll just go and fire up my watch list, which is God, I don't know, it's probably 150 stocks now, and I will just kind of if it's a red day, I'll look for stocks that are green. If it's a green day, I'll look for stocks that are red, and I'll just kind of try to look at relative strength or relative weakness to the rest of the market, um, because I'm either looking at trying to find like a little dip buy, or I'm looking at something that is maybe peaking that I can look into buying puts, the next day or so. But I'm utilizing that time rather than just staring at the tickers and like slamming my head on the desk to do a little bit of research and try to find something rather than just throwing a dart at a ticker and being like, yeah, I hope this goes up. Let's buy some calls.
Yeah, and like a good example of that is, let's say you're watching all the chip stocks. So let's say if you have like Nvidia, AMD, Micron, and Lam Research, and everything's green except AMD's red. So if I saw that, I would think like, well, what's going to happen here? Is all these other three chip companies going to get drugged down red with AMD, or is AMD about to hit like a support zone? Should I be looking at calls? So if you have like a sector of names that they all like to run together, like the sectors run together, and if something's pulled down red, if you know the stock and know like, hey, it's kind of getting near support zone, unless something crazy happens, this stock should bounce back up and start moving up with its sector. Like that's one of those things where the screen time helps you out, and that understanding your list helps you out, and that could get the dip by momentum. And another, like, or if you were a momentum play like Zach, let's say like AMD's up 5, Lam Research is up 5%, and Micron's up 5%, Nvidia's up 2. Zach might be like, well, if Nvidia hits this breakout point, it's probably going to hit it because all chips are running today. Why isn't Nvidia up there with all the others?
Yeah, I'll keep a closer eye on the one that is either weaker or stronger than the rest, just
Yeah.
to kind of do, gauge sentiment on it and stuff. Just because it hasn't done that move yet, maybe lagging, it may be ahead of the others, maybe the others are going to fall, and just kind of put it on your agenda to watch. You don't necessarily have to play every ticker that you're looking at. You can just watch it and learn. Like John was saying in the beginning, he likes his core set of stocks because he likes to see how they react to news, how they react to their support levels and their resistance levels and stuff like that. Um, a good example of that um, is Facebook. That's one of the stocks that I used to play all the time when I used to do more breakout trades, because it had a tendency, still does, I think, to have really, really explosive moves at those levels of support or resistance. It'll either like break up and then just flush. Like it closed at around 3:35 on Thursday,
Thursday. Yeah.
and um, let's say the trigger's at 3:35, right? We could see on Monday morning, if it opens below, say 3:34.50, we could see that stock go to like 3:40 in like 1 5-minute candle, like no time flat. But a lot of stocks don't move like that. Like Facebook has a tendency to move really, really hard, either at open or in any big support level, whereas a
Yeah.
lot of other stocks don't do that. So it's important to know that when you're trading it, so that you can adjust how you're trimming, how you're taking your stops, stuff like that.
Yeah. And then it's the same thing. Like, you don't want to be in a name that's not going to move. Like, you don't want to buy like snow oftentimes just kind of hangs out in the middle of the day.
Oh
Like,
yeah.
you don't want to just absorb. You don't want to hold the premium for somebody and just get wiped out for no reason. And you don't want to, like, just like Zach said, you don't want to hit the ask on a stock. Like, if his breakout zone's like 335, if it's like 335 at 1 penny, you might not want to just hit the ask right there and kind of get caught whenever it retests back down. So it's you really kind of have to understand what you're getting into and not just guess. You don't want to be guessing. You want to be making educated decisions.
Yeah. And it's a big thing too is like when you see all of Twitter, with the little heart emoji eyes going nuts over a stock, I always take that with a healthy dose of criticism, or skepticism, excuse me, because I feel like I've started to notice this year in particular, the more people are on it in Twitter, generally speaking, it's not always the case, but generally speaking, you'll see more failed breakouts on those tickers. I feel like you may get that initial pop, and if you're quick to take your profits, you'll still make money. But I also see a ton of people get annihilated because they're like, oh, everybody on Twitter is talking about this. This thing's going to go to the moon. And let's say it's Facebook at 3:35 and they buy their calls for, let's say, 340 calls on Monday, and then it goes up to 337, 338, and then boom, it just flushes back to like 332 or something. Like that's something that happens all the time on stocks that I see FinTwit, the ones that are all over, and it's something that I almost avoid those stocks sometimes. And if they go nuts, I just kind of go, no, it happened, you know.
Yeah.
But it
And
keeps me from blowing up my account in chasing with other people.
yeah, it usually doesn't work for you. Like, usually when you're the 15th heart eye Twitter account that's going, oh, here we go. That's usually about the, like, we have our own group chat where once we see about 3 people going crazy about like SPY or saying here comes all times high, that's usually about the time you want to start either thinking buying puts or thinking selling.
Yep.
Because just like it says, 10% of the people in the world can be profitable. Well, even there's thousands of people with tens of thousands of followers. They can't all be right all the time. And once you start seeing that majority think one way, like, same way hedge funds watch other funds, they pay attention to Twitter. They're not going to let you go out there and make hundreds of millions of dollars off of them, and not on top of that start spamming emoji eyes in their faces. They'll go and take care of you.
So just on that note, I actually do, without name dropping, I do know two different people who have friends that work for hedge funds. And both of those hedge funds, they're different hedge funds. Both of them have a full-time employee whose job it is to monitor Twitter sentiment. Just as an FYI to anybody who's listening, it's not something that it's like conspiracy, the more eyes, the worse it is. Blah, blah. Like those hedge funds see all those retail traders in something, and they start rubbing their hands together, doing the evil laugh, like, "Ooh, we're gonna get some money today," because they're gonna do the opposite because they have the capital to push you around and invoke that maximum levels of pain. Like it is something that they do. That's their job.
Yeah, and again, if they don't, they're looking at things in like a multi-year view, and even like Zach said, he's looking at a day view. I might be looking at a couple day view. Like, they don't care if they push Facebook down $10 to the end of the week. They might put it back up 15 on Monday, but if all those contracts expired on Friday, they already made their $100 million, $500 million on all your premium. They can use that money to buy back the shares, do whatever they want. Like, it's a whole different world when you start talking about that kind of money. And like we'll talk about like the dark pool stuff probably on another space, but like there's huge manipulations and all this liquidity going into stocks. So you really don't want to be the like last man on the bus. You want to be getting off as the crowd's getting on. And same
Yeah,
thing when everyone's getting off, that's like my favorite time to get in is when literally when everyone's telling me or everyone's on Twitter going, "This is it. This is the end. This is
yeah, they're doing
I,
RIP whatever the
RIP
ticker is.
spy." They're
Yeah,
putting they're counting. They say this is the run ends here. I should have known it was over.
yeah.
Like
There
when
was
people
a couple of my biggest percentage scalps this last week were on QQQ, and I'm not just saying this just for to stroke my ego or anything, but they were legitimately. I was buying either calls or puts when I saw somebody on Twitter call out a play that they were buying the opposite. And I just happened to be doing it. I wasn't buying a call or a put because somebody else was buying the opposite. It was just like I was seeing it come to a level of support that I wanted to buy, or it was breaking under a level of support that I was like, okay, I'm going to buy puts. And then the other people saw it as like, oh, it's going to keep going. And I was like, no, I think it's going to hit this level of resistance and fail. And it worked out more often than it didn't this last week, but it was kind of like, you can't just it goes back to what John was saying earlier is like, please don't just follow every alert blindly. Try to at least have an idea, or if you do, try to look into it a little bit while the play is playing out. Like usually you're not going to sell within the first 2 or 3 minutes, right? So if you're going to just blindly follow, pull up the chart, look at it, try to figure out why we bought it or why John bought it or whatever, and then go from there. Like try to take each time you do that as some kind of a learning experience, and don't just say, okay, I'm going to just buy everything that he buys and then I'm going to be a millionaire.
yeah, and I mean you could tell. I mean, what there's a couple 120 something people in here. Like clearly you guys all are here to learn a little bit more and kind of do that extra mile to separate yourself from the pack. So you'll kind of get the chance to see like all the trigger traders, if that's what you like to do. They say, here's the names I'm looking at. They'll say it before the market opens. So you kind of have all night and all pre market to review it. I kind of always trade the same few. Like if I trade a name, you can add that same name to your watch list if it's a name you want to be interested in and say like, oh, he's trading this name. I kind of like that name. I'll read more up about it and kind of add that to my watch list. Or you're like, I don't know why he's trading that name. I'm not even going to touch that one. Like Zach, like I'll talk about Caterpillar, and Zach says, "Have fun with Caterpillar. You can't pay me to touch that."
I hate that. It moves too slow. Like for me, it doesn't have enough volume. So,
Yeah,
but that boils down to like me wanting to have a day trade and you wanting to have like a multi-day,
yeah,
small little swing trade, and that's the difference in our style. Like for me, I've played Cap before, and it was like if I don't hold this for at least one day, it just doesn't do enough, and so that's kind of where that goes. Or
yeah,
that comes from. Like that's why I don't like Cat.
yeah. But it's like the same thing. Like if it's not for you, like don't force yourself to like it. Like
Yeah.
it's there, it's not. And then same thing. Like if you wanna, if you say like, hey, I see the same thing he sees, and you want to say like, I'll go in and go do it and see how it works out. Just just kind of have a plan going into things on why you're in there or and how you want to exit yourself out. Like it's a huge mental like I think that picking the stocks is easy and buying the options is easy to me. It's when to sell, it's how long do you hold, and that's kind of what like there's going to come a day where the hold till expiration isn't going to work because there's not going to be such a volatile market, and I'll adapt kind of accordingly to that. Like what a month ago, I think it was when I was doing the Austin Powers. God, I lost my mojo because like they were swinging down but weren't swinging back up, and I was like, oh, maybe it's time to adjust back. But then it wasn't time for it yet. Like the market's kind of a dynamic place. So you got to say like, well, what's working now? What's not working now? And kind of
Yeah.
go
I
from
was
there.
actually talking with one of the people in my Discord that our trading styles seem to line up very often. Like, no joke. I feel like anytime I'm in a stock and I'm talking about it and I'm like, oh, I just entered such and such, then she always goes, I am too. like every single time we always seem like we're in the same thing. And so we talk about, one of the things we've been talking about is like the obscene amount of failed breakouts lately. You see it. I feel like either that, or you'll see a stock that it takes off, but then the next day it loses all its gains. And then maybe it trades sideways for a day, and then it breaks out again, and then it loses 50% of its gains the next day. It's like this market right now has been really, really hard for swing traders in particular, because a lot of times when you see that big up, that big down, that big up, that big down, you just your premiums get crushed every time you get those big flushes, and it's really makes it a lot harder to hold, and it becomes a much more psychological game that you have to like force yourself to stay in if you believe in your process and believe in the reason that you took the trade to begin with. But
Yeah, that was
that's
like
also
Pfizer last week. Like, so Pfizer I had, and I'm not sure if anyone else in this chat had. So I had Pfizer for 59 cents. That's what, same day it went to $1.20. So I sold half of it. The next day, it literally, I think it chopped around and like closed at like $1.10. And then the third day, it went to 240. So it's not going like Zach said. There's no second day continuation. It's kind of
yeah
like a up day, range day, then might break out again. So if you were oversized, you would have been like, if you were in, like Zach said, if you had $2,000 and you were in for 1,000, and you're like, all right, I didn't sell it at 80 or 100%, and then the next day, oh, it's down to 50% up, and you start freaking out a bit, and then you miss that 300% move up because you were oversized and didn't understand the play, or you're like, why am I here? Why did I do this? It's one of those things where if you had your plan going in, you would have been prepared for that move. But if you were just kind of, what's going on? Should I, shouldn't I? You kind of really got to have that courage and your convictions when you're taking these plays, or you need to get out and get, like, you could have bought Pfizer, sold all of it for 80 or 100%, bought it back the next day, and then sold it again for 80 or 100%. And it
yeah
would have worked out about the same.
I'm actually glad that you brought that up, because that was one of the things that I wanted to bring up in this space in relation to breakout trading, or riding a trend on a given day. Now, part of this depends on the size of your account. This will be a lot harder to do if you're only buying, like, you know, say 4 or less contracts. But a lot of times what I like to do is, if you're playing a breakout and you see I like to use the Ripster EMA on the 10 minute, which is the 8 and the 21 EMAs, where it forms like that little cloud underneath your candles. A lot of times what I like to do is, if it pulls really far away from that EMA, like it just moonshots. Like a great example of this, if anybody who's listening has a chart up, if you want to open up Facebook from uh, last Thursday.
And I'm going to have this recorded too. So if you guys wanted to come back and play this back
Yeah.
later and follow along with what Zach's saying, the recording will be available, and I'll either have it here on Twitter or have it uploaded to YouTube, so you can kind of go back and play around with your own charts and
Yes.
stuff. So don't worry about like, oh, can you go back and repeat that? Can you do this? Can you do that? It'll all be recorded for you.
Yeah, I'll try to explain it in a way that you don't necessarily need to see it either. So, Facebook on Friday, um, let's just say you were going to buy it at the breakout level of, it doesn't even really matter. If we're just following the Ripster cloud on the 10 minute, and it breaks out, it basically shot straight up after we got a little bit of a dip, about 30-40 minutes in. It was around 3:30, and it basically just went, you had 1, 2, 3, 4, 5, 6 straight green candles all the way up to 336. But you could see, in relation to the cloud, that by the time it broke about 330, 450, 335, it was pulling really far away from that EMA cloud. And so what I like to do when that starts happening is, I like to start to trim a big portion of my position. I might keep a small portion the whole play through, but I'll sell a lot of it, and I'll wait for that pullback. That a lot of times you'll see it displayed as like a flag, right? Like a 5 minute. A lot of people post like on Twitter the five. It's flagging on the 5 minute or it's flagging on the 10 minute. A lot of times when it's doing that, it's the stock consolidating back and waiting for those lagging EMAs to catch back up, and then you can buy it again when it dips back to that 8 EMA, and then you can the options are going to be a little bit more expensive than when you initially bought, but you've already taken a bunch of profits at a higher level. So let's say you sold your contracts at $1.50 each, and then they pull back to that EMA. Now they're maybe $1.20, $1.15, and then you can catch that ride up. For example, with the Facebook, if you had bought, you could have gotten back in at about 334, where it peaked at 336, and then you could have ridden it back up again to 336, a little over 336. 336.67 was the high. So you could have sold it almost at the high. You could have bought it $2 less, and then you could have ridden it another 2.5-ish dollars back up, and you could have made profit multiple different times. So like when I do breakout trades, that's one of the strategies that I like to use also, but you have to, that's one of those things that you kind of have to learn from watching watching certain stocks or just having screen time, where you can be like, okay, this stock has a tendency to act this way. And then Facebook is a great example of that. It does that all the time. When it's on a trend day, it gets those big candles where people are going nuts on Twitter, and then it gets those pretty significant pullbacks to that cloud, and you can be in and out of the trade 3 or 4 different times. There's no rule that says you have to buy it once at $1 and sell it at 3. You could buy it at $1, you could sell it at $1.50, you could buy it at $1.25 and sell it at 2, and then you could buy it back at $1.75 and then sell it at $2.50. Like, you can do in and outs like that all the time, and it works really, really well.
Yeah, and I think Thinkorswim and a couple other trading apps have like paper trading, where you could like fund a fake account with, I don't know, 10,000 or however many dollars you
I
want.
think it actually starts you with like 100K or something silly.
Yeah, yeah, something way out there, and you can kind of practice those trigger trades, because they're really, the trigger trading and like the breakout trading is a really methodical process, where like the dip buying, like Zach will sometimes say, he's like, I kind of like your dip buys because sometimes I can get like lower fills than you because it will go down a little bit more. So like I mean, I really don't think I'm that smart or really have any kind of crazy technical expertise on much as like, well, I bought this, and if it blows up, oh well, but it might go up. Zach is like, well, I have this level here where it needs to go this way, and it sells, and it's a really, he really has his process ironed out, and it's methodical. So like, if you want to do like those breakout plays, those trigger plays, like what Zach's saying, like follow the screen time, get that practice in, and then kind of just really nail out your style. Like Zach has his stuff down to a T, and that's from him just practicing and working hard at it. And the in and out, in and out, in and out, and he can do it all day long because he's really comfortable when he's developed out his process for it.
Yeah, but you also, when you do that in and out, the key thing is you have to be willing to be in and out for 20, 25,
Yeah.
30% each time. So, and there are times where you might be like, okay, it's pulling away from the EMA, I'm going to get out, and the thing rockets up, and you go, man, I could have, if I didn't sell, I would have made this much more, and yada, yada, yada. But the whole idea is you want a repeatable process. The
Yep,
amount of times that
exactly.
stuff just explodes and goes completely vertical, it just doesn't happen often enough, especially the way that our market has been, you know, just super volatile, super up and down. It just doesn't happen often enough for me to care. Like, if it happens, I go, all right, I'll wait for a pullback to the EMA. If we don't get it, then oh well.
Yep.
Move on.
Yep. And that's all about just understanding like what process you're in and what kind of style you're going for. Like if you're taking one of those trigger plays, understand you're in a trigger play. So if it works, work the process, work the plan. If it doesn't work, work the process, work the plan. Don't try to make Like, don't try to make a dip buy a trigger play, and don't try to make a trigger play a dip buy. Like, understand why you're in something and what the goal of the play is. Don't try to like force it through here there. And then I think that's pretty good. I posted a thing on Twitter, like if anyone had any quick questions to do as well. And then we can wrap this up before we start rambling here. So I'm going to go check that real quick. So just go through here. What's a good place to learn more about accumulation and distribution period? Isn't that like that Wyckoff or Wyckoff thing, Zach?
I think is he just talking about like supply and demand zones? Is that what he's talking about?
It's a she, but so,
Oh,
so uh,
send me the link in the DM really quick so I can see what you're looking at.
yeah, I'll send that to you. Go through the next one. Is there other important points you check before entering position? So I like to look for like I have like a video on YouTube like why I bought like Palantir, like where the bottom of those sell offs happen. Like it's sold off to, let's say you had 100, it sold off to 90. If it goes back to 90, I might buy it again on that dip to see what happens there. So you want to see like when it was getting sold off and getting ugly, where did it stop? Where did the brakes get pumped? Where did they start to buy it back? Any YouTube channels you can learn from. So Zach and I both have YouTube channels posted on our Twitter bios. So Zach had a pretty cool video he posted on Target where he went over some stuff, and I kind of I have some on like Palantir and then the Pfizer play. Zach has like we both have some good content out there if you wanted to go and check it out and learn some more.
Yeah, so I was looking at this thing you just sent me. I think what she's referring to is basically just trying to decide. Um, you're probably this is probably more up your alley because I think it's more like a good example is we were looking at BBY the other day, and I think that the chart that I sent you is kind of more of like the accumulation level is what she's referring to, I believe, where you have like the chop at that big level of support on the bottom end, and then you have like your distribution, which is your level at the top where you see a lot of the chop at the top before it flushes back down. um, I don't know of any place that has really good resource on that. But I see a lot of people talking about it on FinTwit. They refer to it as just support and resistance levels or zones,
Yeah,
where it's kind of like a range where the stock tends to chop inside that range, and it's usually where big money is either buying or selling, and you can kind of just you can see it on a chart if you look at a bigger time frame and you want to see where the stock is range bound for a good amount of time, a couple of days, a week, something like that.
yeah. And then someone just posted John Tran just posted something. I'll just do this and point a rocket ship above it. That kind of goes into like the accumulation Wyckoff price cycle. I think that's what she was might have been referring to. And then you can also Google supply and demand zones.
Yeah.
So that's good. And then point where you can seriously learn more how to trade successfully. I think that's kind of just like there's no magic way to get rich. If there was a magic formula to get rich, everyone would have it. And they'd all be rich. So you got to work and kind of figure out, is it learn what you can from all the different traders on Twitter, watch YouTube videos, read books. Like everyone learns a different style. Like there's not, if there was one golden rule how to do it, there would be no FinTwit Furus. There would be no YouTube. There would be no nothing. There would be the
There'd
guy
be
who
no
wrote,
paid discords or
yeah, there would be the guy who wrote that book and he would have $1 billion and everyone else would have $1 million, but then you wouldn't be rich anyway. So there's no shortcuts you can make. It's all about just kind of putting the work in and getting there.
yeah. And I think a big part of that too, if you wanted to make it a full-time gig, is you have to be willing to learn a process that is repeatable for your psychology. Like we've said when we started this, like John's trading style and my trading style are not the same. Both can be successful, but you have to figure out what works for you. And if that means that um, you find plays where you can hold and take your first trim at 100%, or if you're going to take certain plays where you're taking your first trim at 15 or 20%. And, but whatever it is, there's no cut and dry answer. That's something that you just have to put in the screen time and learn how you are and what your psychology is and what you're comfortable with to enable you to do that.
Yeah. And I think that's pretty good. I think I'm sure we've been talking in circles and boring you now on your Sunday night, but I guess unless you have anything else to say, Zach, I think good luck tomorrow, everyone, and we'll see how the week goes.
Yeah, I agree. I hope everybody has a great week. I think that it's going to still be wild here in the market for the next little bit, in a good way or a bad way. But hope everybody makes money, and we'll try to do this again sometime soon.
All right, later, everyone.
Take it easy.